Back in December, I asked a very simple question. What is the best UK dividend stock? I put this question out to two places, my YouTube community via poll post and the Trading 212 Dividend community. And what I found was actually really interesting, because the answers weren't completely the same. Some stocks kept coming up again and again, some were clear favourites, and one name in particular absolutely dominated. So in this video, I want to bring everything together. We're going to look at what you voted for, what the Trading 212 community said, what AI thinks the best UK dividend stock is, what the data tells us, and then I'll give you my own personal view. And if you're a beginner investor or someone investing with smaller amounts of money, this question really matters, because picking the right dividend stock early on can make a massive difference over time. So let's start with something important. Before we look at the results, we need to answer a slightly bigger question. What does best actually mean when it comes to dividend stocks? Because the truth is, there isn't just one single correct answer. Some people define best as the highest dividend yield. Others might say the most reliable dividend payer. Others want a mix of income and growth. And some just want a big, stable company they can hold for years. So in this video, we're not just looking at yield or past performance. We're looking at what real investors are actually buying, what names keep coming up, and which companies dominate the conversation. Because sometimes popularity tells you a lot. So let's start with the YouTube community. Back in December, I put out a poll post asking a very simple question. What is the best UK dividend stock? And the result was surprisingly clear. Legal and General. Yes, Legal and General was the unanimous winner. It wasn't close, it wasn't split. It was the name that came up again and again. And honestly, this didn't surprise me too much. Legal and General is well known, high yielding, consistent, and very popular among UK income investors. For a lot of beginner investors especially, it ticks a lot of boxes. Affordable share price, strong dividend history, and it feels like a classic UK income stock. So from the YouTube community alone, you could already argue Legal and General might be the favourite. But when we looked at the Trading 212 Dividend community, things got a little bit more interesting. I asked the same question over in the Trading 212 Dividend community, and this time the results were more spread out. Here's how it broke down. British American Tobacco came in with 26% of the votes. Legal and General came in with 20%. Rolls-Royce followed with another 20% of the vote. NatWest came in with 13%. BP came in with 6% of the votes. HSBC came in with another 6% of the votes. And the remaining 9% was spread out a bunch of other stocks. So this time it was much more of a split vote. British American Tobacco of course came out on top, but Legal and General was right behind it, followed by also Rolls-Royce. And this tells us something really important. Different types of investors value different things. For example, British American Tobacco is known for very strong dividend income. NatWest and HSBC appeal to banking income investors. BP appeals to energy sector investors. And Rolls-Royce is more of a recovery plus income play. But again, Legal and General is right near the top. So now we've got two data points. From the YouTube community, we have a clear winner in Legal and General. And from the Trading 212 community, we have a split vote. But again, Legal and General near the top. And that consistency is worth paying attention to. Before we get into this section, I just want to make something really clear. I'm not suggesting that anyone should use AI to pick their stocks. And this definitely shouldn't replace doing your own research. This is simply an exercise to see what kind of answers AI gives when asked the same question as real investing communities. So, I asked ChatGPT, what is the best UK dividend stock? And interestingly, instead of giving just one name, it grouped its answer into categories. First, it highlighted the high yield income plays, the types of stocks investors often look at when their main goal is generating cash flow. At the top of that list was Legal and General, which it pointed out as one of the highest yielding companies in the FTSE 100, sitting at around the 9% mark. Alongside that, it also mentioned Phoenix Group, M&G, and even Sainsbury's as companies offering yields above the market average. But then it shifted focus slightly. Instead of just looking at the highest yield, it also brought up what it called the more reliable, consistent dividend payers. The companies with long track records of steady payouts. Names like Unilever, Diageo, British American Tobacco, and National Grid came up here. These aren't always the highest yielding stocks, but they're often seen as more stable, defensive businesses with dependable cash flow. It also pointed out a few other interesting dividend names to watch based on more recent data, including NatWest and Sainsbury's again, both of which have seen improving dividend cover. And then some lower yield but faster growing dividend companies like Howden Joinery and Games Workshop. And what I found quite interesting is that ChatGPT also gave a little bit of guidance rather than just picking a single winner. It highlighted that a very high yield doesn't always mean a better investment, that dividend cover is important, and that sometimes a slightly lower yield from a stronger business can be a better long-term choice. But if you look at the overall summary of the companies, it kept going back to a few names that stood out repeatedly. Legal & General for its very high yield, Phoenix Group for strong cash generation, British American Tobacco for its big payouts, Unilever for its global stability, National Grid for defensive income, and NatWest for improving dividends and profitability. So just like the communities we looked at earlier, there isn't one single unanimous answer here. But once again, Legal & General appears near the top of the conversation. So next, I asked Google Gemini the exact same question. And just like ChatGPT, it didn't give just one single definitive winner. Instead, it broke the market down into categories. First, it looked at what it called the high-yield heavyweights, the stocks currently offering some of the biggest dividend yields in the FTSE 100. Legal & General came up again, with a yield sitting around the mid to high 8% range. It described it as a staple for UK income seekers, highlighting its strong track record and solid capital position. Phoenix Group was also mentioned, known for its predictable cash flows from closed-book life insurance policies. M&G made the list as well, with a policy of maintaining or increasing its dividend annually. And then there was WPP, offering an extremely high yield, but with a warning around its lower dividend cover, meaning potentially higher risk. Then Gemini shifted to what it called the dividend aristocrats, companies prized more for reliability than headline yield. British American Tobacco came up again, described as a cash flow machine despite long-term structural changes in the tobacco industry. National Grid was highlighted for its defensive characteristics as a regulated utility, with income that's less tied to the economic cycle. And BAE Systems was mentioned too, a lower yield but significant growth potential due to increased global defense spending, offering a mix of income and capital appreciation. It also touched on growth-focused dividend names like Games Workshop, which only pays out truly surplus cash, and Lloyds Banking Group, which has recently been increasing dividends and buying back shares. But what I found interesting is that Gemini, much like ChatGPT, emphasized the importance of looking beyond just the yield percentage. It specifically pointed out two key metrics: dividend cover, meaning how well profits support the dividend, and free cash flow, or solvency, to make sure companies aren't borrowing just to fund payouts. So once again, we don't get one clear winner. And just like the investor communities, the AI seems to circle back to many of the same familiar UK income names. Now let's look at this from a different angle. Instead of asking investors, let's look at size. Because the biggest companies in the market are often the most stable, the most established, and the most widely held. When we look at UK dividend-paying giants, names like HSBC, BP, Shell, and British American Tobacco tend to dominate in terms of market cap. These are huge global businesses that generate massive amounts of cash, and that's often why they can afford to pay such strong dividends. But size doesn't always mean best for a beginner investor. Sometimes growth is slower, dividends can be less consistent, and price movement can be tied to global factors. So while market cap is important, it's only one piece of the puzzle. Now let's think about behavior. What are retail investors actually buying? Across UK investing platforms and communities, the same names tend to pop up again and again. Legal & General, BP, HSBC, British American Tobacco, and NatWest. And again, Legal & General is always in that conversation. It's one of those stocks that new investors gravitate towards, income investors hold long term, and dividend-focused portfolios almost always include. So when you combine the poll, the Trading 212 results, and general retail behavior, there's one name that keeps showing up consistently. So, if you haven't guessed already, if I had to choose one UK dividend stock based on popularity, yield, stability, and beginner accessibility, Legal & General would probably be my pick. And it's not just because it won the YouTube poll, it's because it keeps appearing everywhere. Strong yield, recognizable business, popular with income investors, and a staple in many UK dividend portfolios. But, and this is important, if you asked me what the best overall option is for a beginner investor, it might not actually be a single stock at all. It might be an ETF, specifically IUKD. Because instead of relying on one company, IUKD gives you exposure to a basket of high dividend UK stocks across multiple sectors in one simple investment. So rather than trying to pick the one winner, you're spreading your risk. And for beginners, especially those investing smaller amounts each month, that can make a lot of sense. So my personal takeaway is, best single dividend stock, Legal & General is a very strong contender. Best overall approach, something like IUKD for diversification. But I'm really curious to hear from you, because this question doesn't have just one answer. So I'd love to know, if you could pick one UK dividend stock, what would it be? Drop it in the comments below. And if you enjoyed this video and you like content focused on beginner investing, dividend portfolios, and building wealth with small monthly contributions, make sure you're subscribed to Effortless Investor. As always, keep it simple, keep it realistic, and keep it effortless.